Welcome back to Real Estate 411 on WJR. This is Paul Compo, your host, and my wife, Annette Compo, is your host, and we are your hosts of Real Estate 411, and we have with us Beth Shensky, VA Shensky, here with us, and we were talking about our renters and the concern for people in the rental market not having any equity, not owning any ownership and any equity in the home.
Well, when you look at, and Beth, chime in regards to clients that you've seen in Real Estate 411 listeners that have their taxes done by your company, EA Shensky, the largest asset that people normally have in their portfolio is their house.
That's very true, and they assume and hope for appreciation there, so that their money grows over the period of time that they are in that home.
And obviously, coming out of what we've just come out of, where people lost value in their home, if we would have planned appropriately based off of paying down on our principal, like many people who didn't sell, many people that didn't, weren't able to qualify for loan modifications, just started throwing more and more money at their principal amount to bring it down. So it brought that equation to a more equal, level, are now experiencing, the increase in value, and their asset is now increasing as well. And it's reflective in regards to the numbers coming out of 2013. But let's take an average client that walks into your door to get their taxes done. One owns a house and one doesn't.
Well, it is always interesting. The client that walks in the door who is a homeowner has their interest deduction, which is always substantial, and their property taxes,
which is always substantial,
which is never inconsequential, right? And they have those right off the top. They do have the upkeep and the ownership costs, but they have those write-offs that they get to take on their tax return. The individual who walks in the door who does not have that asset in their back pocket just takes what the government will give them back. They get a standard deduction, which increases each year, but they do have a block of money that they do not have to pay tax on, because they have expenses that the government understands. They make contributions to church, they pay for their vehicle licenses, but they don't have the major bang of the mortgage interest and the property taxes. That's always the determinant of do you itemize or not.
And because of that, it doesn't open up Pandora's box to other opportunities for deductions.
That's correct.
And that's kind of where you don't qualify for it, because you didn't hit that base minimum to be able to open up that box. And I know, Paul, you and I have talked about over the years in regards to this time of the year that people get tax refunds. And as much as we hate to see people loan money to the IRS, and hoping that, like, it's almost treats it like a savings account, which is the worst investment.
That they have that money returned to them.
Right. What do they do with that money? And so we kind of always put out there, promote the idea that you use your tax return for a potential down payment on your house. That is a really good investment for your tax return. The second thing that we always talk about is if you have high debt, especially like high credit card interest rates, to really kind of make, that pendulum swing more in a positive note, to relieve some of that stress by having those higher interest rates.
Pay down on that debt.
The debt, get the debt down where, I would like to see, where homeowners are, more fiscally responsible for having less than $10,000 under debt category, minus a home. That literally means their cars, their credit cards are well under $10,000. So if for some reason something happens, they can sock away any extra money into what I would consider like a safety fund or an emergency fund or whatever it is, where they're not using their credit card as that life raft or life, ring, when an accident does happen.
Well, in everybody's life, the two largest factors of taking somebody's income to debt ratio and reducing it and causing a lot of debt for them are mortgages and home loans and car payments and car loans. So those two combined, people can destroy their credit in a quick way in their life if they don't handle things.
Well, it takes us a car accident, illness. Mm-hmm. Just any type of a situation pops up out of nowhere. And trust me, it doesn't discriminate. It hits everybody at some point in their life, and sometimes it hits people multiple times throughout their life. So you always want to kind of have that into account. So, looking at getting your taxes done, please reach out to EA Shensky and best share the number that they can call, our Real Estate 411 listeners can call to reach out to you.
It's 248-544-6160. We're located over in Madison Heights.
And, of course, you can always call us at 877-266-3883. That's 877-ANNETTE for Real Estate 411, and our website is realestate411now.com.